Okay, yeah. Right. And good. Good now? Okay, good.
Excellent.
So again, just well, for those who weren't here in the first session, I will just go over again why you need a validation report. First of all, what is a validation report and why you need one? If you do hear some background noise here, there's some construction work right outside my office. We chose to do it today, so just forgive me. Um, right, so the first question is, what is a validation report? In our field of work, we've realized that many people do not know what a validation report is. They don't understand why a validation report is needed. They don't understand um, what are the um, requirements to do a validation report. Um, so, we're just trying to basically educate those of you who may not know, those who know and still don't understand why a validation report is needed. We hope to educate you a little more, but basically a validation report is a description of the property and it gives all the basic characteristics of the property. And the most important thing for anyone in a valuation report is what is the value of the property. That again, as I said before, most people just flip. They come to the office, they pick up a report. First thing they do is, where's the value? They don't want to read a single thing again in the report. What's the value? So, we know that's what is the most important thing for most persons. What information does a valuation report present? Basically, it gives you the information on the land area dimensions. That is basically acquired from the deed. And if we have the cadastral or survey plan, that information is taken from that. The building construction components, accommodation, area and condition. Um, Again, most people don't understand what needs to be done to complete a valuation report. We, as evaluators, we must visit the site. We cannot do a valuation from the office. If a valuer gives you a valuation report without visiting your property, well then I would tell you to just probably throw it in the bin because they must visit the property. You cannot do a valuation without see the site. If it's a building on the site, you must measure the building. You have to see the exterior of the building, condition of the building on the outside, and also you must see the inside of the building. You have to. The evaluation report presents, and very importantly for the bankers, for anyone who has an interest in the property, a potential buyer, anybody, the evaluation report presents the accommodation. It tells you what the condition of the building is. It tells you what finishes may be in the building. Very importantly, if there are defects in the property that we may notice, it tells you this is there present. I should point out, we don't go digging into the plumbing, into the electricals. We don't go climbing on the roof. We don't do those things. So I can't tell you if the roof is able to hold my weight or if it will collapse, because we do what we call a visual inspection. It's from wherever we can see it, but we generally tend to we see basically issues that are visible. Again, the tenure. There are two types of tenure for a property, either freehold or leasehold. Freehold means you more or less are able to use the land without much restriction in use, except for where town and tree restricts you. Leasehold properties tend to have what they call covenants on use. They restrict what you may be able to build on the land. An HEC lease will tell you can only use land for a single private dwelling house in nearly all instances. Some areas, like for example, Europe and Senegal area, there are restrictions that say you can only use the land for a single private dwelling house. There are some that say you can use it for commercial use, you can use it for some say for agricultural use, there are certain restrictions on use. So you need to know the tenure of the land that you're investing in, whether there are any restrictions on use, the potential use of the property. Is the existing use of the property fulfilling the full potential of that property? In other words, if it's a piece of land on the Eastern Main Road in, say, St. Augustine, would you buy a property there to use it just for residential use? Not really. The highest and best use is commercial use. So at the end of the day, that property may not be utilizing the highest potential of land. So at the end of the day, the building that stands on land may be of no material value because it's an underutilization of land. We provide photographs of the property. Again, I will say we only do an internal photograph of the kitchen of a person's house. We try to be as respectful of people's property, and you know, some institutions ask us to take photos of people's bathroom and bedroom, and we say no way, we're not going to give a photo of a person's bedroom. That's, you know, so we do a photo of the kitchen because again that is it's a unique identifying area of the interior of a person's house, and we do external photos. We also try to get the cadastral survey plan for the land, and very importantly, as I said, the valuation opinion, which everybody wants to see before they read anything else about the property. What do you really want to know in a valuation report? The question was asked in the first session, you know, about the market value, whether it differs based on the purpose. Well, that was the indication. Market value is, as defined by the RICS, the estimated amount for which an asset or liability should exchange on the date of valuation. Now, there must be a willing buyer and a willing seller, and it must be an arm's length transaction. Now, whether a valuation is being done for sale, for mortgage, for purchase, for transfer, for whatever reason, market value stays the same. The purpose of the reporting may be different, but the value that's reflected in the report stays the same. So it doesn't matter what purpose you're doing a valuation for, market value is consistent. We also, for simple residential properties, we give a replacement cost. We touched on this point a little earlier in the previous session, that we as valuers are specialized in market value. In other words, what a property can sell for, how much you can borrow on it. We are not the specialists on costing. Costing being how much would it cost to replace a building. We would give it for simple residential properties because based on the information we have through getting quality surveyors reports from persons and stuff, we know what costing is on a house. But on more complex properties, it's not really something that we can give. So we always say, if it's strictly something that is for replacement cost you want to know, go to a quantity surveyor and not a valuation surveyor. There is a big difference. We are all of the surveying profession, but there are three surveying professions: quantity surveyors, valuation surveyors, and land surveyors. We are different. Market rent, we do provide market rent on the property. In other words, what can the property be rented for in the event that you need to vacate the property and let it to someone. When is a property generally requested? If you're buying a property, it's required by the financial institution. It's required by you, first off, because you want to know that what you're buying is worth what is being asked. And also, when you are completing the purchase, the Board of Inland Revenue requires a valuation report with every property that is going to be registered when you're going to register the title. If you're selling a property, in today's current economic conditions, it's advisable to a lot of vendors to get a valuation report because the market conditions are changing dramatically at present. If you're transferring a property again, You're not buying property, you're getting it from your aunt, your uncle, from your parents. It's being transferred to you. You need to do a valuation report to send it to the BIR. That's a requirement right now. Very importantly, if you're refinancing your property, or you're looking to, as the previous person had said, they're looking to use the equity in the property. You may have equity in your property if you purchase your property, let's say 10 years ago, and you paid off half the mortgage. You may have equity. You may have something that you can borrow on, in the event that there's a need. And also, again, for financial reporting, we have to do these valuation reports for it's the companies that basically need to submit their audited accounts. They need a valuation report to present to the accountants. And on a very small basis, we do court dispute resolutions. We provide valuation reports to the court to advise on settlement matters. Why should you get a valuation done on a property? It cannot be emphasized enough that in your lifetime, you may never have a larger investment than the home that you are going to purchase. And the worst mistake a person can make in their life is doing something like that, making their biggest investment in their life without proper advice. We've had certain instances where people would come back to us and say, if I only knew this about this property or this location or something, I would have thought again about buying in that area. We as evaluators, we have knowledge of areas. There was a guy who was going to buy a property in Central, and we went to the house. He liked the house. It's a small property, and I said, there's a flooding problem around here. He said, serious? He said, the vendor never told me about it. I said, come to the back of the house and watch the watermark on the back of the house. The watermark was about 3 feet up on the building. In other words, there was about 3 feet of water passing through the house, and he wasn't aware. You wouldn't be surprised how quickly he changed his mind about buying that property. So you as a buyer may not know the risks, but we understand. We know the history of places. We know why you should or should not be invested in an area. So if you're going to make an investment, seek proper advice. The valuer, the banker, the real estate agent, there's so many people you can seek advice from before you go making that big investment. I wouldn't bore you with the cost of the valuation, but it's basically a 1/4 of 1% of the value of the property plus VAT. There is a minimum fee that is charged, but let's say you're buying a property at $1.5 million. The fee would be just about $3,800 plus VAT. You can do the maths. 1/4 of 1% of the value plus VAT. Who should you engage to do a valuation? Now, there are a number of valuers, but not all valuers are accepted by all the financial institutions. Separate though, they have a panel of valuers, a list that they would accept. Other institutions have a list of valuers that they would accept because they have vetted these firms, these valuers, and said, look, they are competent and capable to provide the information we need. Not everyone is accepted by these institutions, and we will always advise you if you're going to a specific institution to borrow or take a mortgage, always find out from that institution who are the valuers on that panel. Most valuers, in fact, I think all the valuers on the panels right now are all RICS regulated valuers. I think that's mostly a requirement of the financial institutions now. So we would advise you, ensure that whoever you seek out, that firm is accepted by the bank, because again, you don't want to go spending money doing a valuation with a firm, and then you find out that that bank does accept them. We get that nearly every week. We have to deal with that situation, because people spend money, they do the valuation, and then they come and say, oh, we didn't know that this was not accepted. Is there a risk in not getting a valuation report from a qualified valuer firm? Yes, there is. There is a big risk, because you do not know what may lie, what factors may lie in the property. We are trained to understand these things. So if you're looking for advice on how much you should offer for a property, you should seek the advice, and be able to know that whatever advice you are getting can be supported. Let me just go back there a second. If you are purchasing a property, and let's say you are looking at what is being asked, and you want to make an offer, you do not ever want to pay more than the valuation will come in, unless you have a huge kitty out there that can support any excess that you may have to find to pay for the property, because as I'll show you in the next slide, there is a risk if the agreed price you're going to pay varies significantly from what the actual value of the property is. And now, people do not understand, or some people do not understand, that we as valuers have limitations in terms of what we can and cannot do. We must be guided by the evidence out there. Whenever we give a value, it is not just, I've actually been accused of pulling figures out of thin air. And we do not do that. When we give a value, we are required to have the supporting evidence to show that this is what the value is. If we cannot support the figure that is being paid, we cannot put the figure. In fact, it's now become mandatory in reporting in evaluation reports, that we state in the reports that we have the evidence to support the value that we are putting. So if you are purchasing a property and your agreement figure is different from the value in that it's higher, there is a risk. You can do the maths. As I said, Shelley can share this slide with whoever is present, and they can do the maths and see the risks that are available to you. So as I close, if you are looking to buy a house, looking to invest in any way, looking to refinance, please seek advice, the professional advice. There's Shelley here, who is a knowledgeable real estate agent. She has the experience. Seth, who is, he understands your financing needs, and Mr. Das, who he understands why you should protect yourself with the insurance. So don't just go jumping into a situation without getting advice. Thank you, and back to Shelley.
Thank you, Mr. Mahabir, for that very informative presentation. We have two questions for you that's on the chat. I'm just going to try to pull it back up quickly. One was, from the top of my head, how did the pandemic affect values in terms of, let me read it. How did the pandemic affect values? The second question is the length of time valuation report takes, well, the length of time a valuation report would take to obtain from your institution. I believe you will be only lending to that information.
Yeah. Okay. So first question, the pandemic is ongoing, and the effects of the pandemic are ongoing. In other words, we still do not fully know the effects that the pandemic is going to have on the property market. the first indication is that just from looking at the evidence of sales in the market between January of 2020 and January of 2021, we have started to see a decrease in property prices. Now it's not a across the board effect as yet, but on the upper level market, the higher income properties, we've started to see some effect. It's as much as 10%, in some instances 15%. But again, it's not across the board. But right now we are in we are basically on a learning curve. We do not know what the full effects are going to be. So until we know better, we prefer to not, we try not to be negative. We try not to be negative. We try to be a little positive here, but we do not know as yet. The second question in terms of how long it will take to do a valuation. Once a request is made with our firm, we normally are able to inspect the property it's normally within 3 working days, unless it's like a far out place, like Mayaro and stuff, we cannot go every week, we go there only so often. But once it's within a regular run area, which is like we are based in Port of Spain, we go to Arima every other day, or at least reach as far as Arima every other day. We reach as far as Cuba every other day. If it's San Fernando, we probably take about a day or 2 extra. And further out from there, once we reach in San Fernando, we try to see as far as we can get, but we can't reach citrus ending quickly. That's really difficult. Once we see the property, we are normally able to present a report within 3 to 5 working days once we have all the documents to work with. In most instances, they get a report in 3 days, unless there's any challenges in terms of getting information. But that's basically how long it takes.
All right, and I can vouch for the fact that Mr. Mahabir would indicate the time frame, and it always falls within the time frame. Again, you get professional service, so it's something you would want to wait on as compared to, and again, from personal experience, other firms. I think that Mr. Mahabir has given us a very comprehensive look at valuation, and what we're going to do is we're going to lend now to our personal from the bank, Mr. Chetaram Ramlokan, who again is a mortgage specialist, and he is also mobile. So if an individual wants to be qualified, his turnover time would be 24 hours, and I can vouch for that as well because I have referred clients, and also his service is outstanding, and I believe he would be up for a promotion very soon. So I'd like to welcome to the floor Mr. Ramlokan. You can say good afternoon, and I do have some questions for you, Mr. Ramlokan. Good afternoon.
Thank you. Good afternoon. As we can all see, Sunil, they are the experts. Thanks, Sunil, for that vast variety of information.
Mr. Ramlokan, let me just apologize to you. I kept calling you Seth. I don't know why. For some reason, I thought your first name was Seth.
That's all right.
That's because he logged on under, I think, the profile.
Yeah.
So that's why, yeah.
All right. So from the bank's point of view, why is a valuation important to us? Right. One, to determine if the property is a viable collateral item. It provides an idea of the marketability, which informs as to the time frame for disposal. 2, a valuation report advises the bank of the value of the property and of any characteristics, including significant defects, which might affect its value as security for the proposed loan. 3, it provides an overview of the economic conditions related to the real estate market. And 4, it confirms the amount of property insurance required for the building. Right. How does the valuation affect the process? After a mortgage valuation, the valuator will give their opinion of the value of the property to the bank. If there is agreement on the sale price, the bank will offer you the money you have asked them to loan you. If you're buying a home and you need a mortgage, then a down valuation is problematic and could prevent you from getting the home you're hoping for. As you can see, Sunil, he explained in his slide the effects of that. Quite simply, even if you're prepared to pay over the odds for your dream home, your lender isn't. You'll either have to, 3 points here, renegotiate to a lower offer, which the seller may not accept. 2, you may have to find more cash to put into the purchase to make up the difference. Or 3, negotiate on a higher loan to value mortgage at a higher rate. Those are just some of the options you might have if the value comes up lower than the selling price. And what we look for basically is the description of the property, including the number of bedrooms and the land size, the risk rating for things like environmental risk, as well as market risk and access to the property, and the condition of the property and comparable sales. Right, so I was told to touch on equity of the property. Equity is the current value of the property minus the amount of mortgage debt against it. The most common ways to tap into the excess equity are through refinance of an existing loan or a new facility against the property being held. For a refinance, you refinance a current mortgage and take out a bigger mortgage. That's where you can maximize on the equity. Right.
All right. So I'm going to throw a question out that either or can answer. But you touched on a point just now when you said the value of the property is dependent on the environment. I'm giving reference to a particular place because I know there's a client here that actually would like to have the information as well. Would you consider, and I'm asking you from my point of view, would you consider the value of a property being lower if it's located near to the industrial estate in terms of a residential property? Anybody would like to answer that for me? And in terms of how you would address that?
Okay, I suppose as my area, it depends. It's not a yes or no answer, because at the end of the day, we are guided by evidence in the market. If and when I say near to industrial estate, what type of industrial estate? Okay, let's give the there's a development in Central near Point Visas. Very, very nice development, but it has struggled to be to sell because of the proximity to the Point Visas industrial estate, because people have a certain fear, let's put it that way. And it's a really nice development, but the problem is they can't get all the land sell out because of the industrial estate. But again, let's say Diego Martin, there's a Diamondville industrial estate near to Diamondville. It hasn't had any effect on the price of property. In fact, it used to actually have a benefit, but I mean, there isn't really any clear benefit or negative impact on it. But it depends. It depends on the area. It depends on the type of industrial estate. It depends also on whether there's any, let's say it's exhaust or anything that is coming out from the industrial estate, whether you're downwind from it or upwind from it, a lot of factors going to answer that question. So it's every property again is unique. and the location of a property, you might be on the eastern side of the industrial estate, and you might have another property on the western side of the industrial estate, and the effect of being on the two sides will be so tremendous that the value will be completely, out of whack. But it comes down to the specifics of the property.
Okay, so can I also add, because you would see a lot of advertisements or even speaking to that property, people might say that it actually adds value to be in a particular location. When we talk about location and we talk about a property, we are commonly we would talk about malls and state police stations, about schools, and the location near to the highway or access to the highway. But in terms of an industrial estate, I understand what you're saying in terms of environmentally, in terms of pollution, etc., as compared to, let's say, TCL. Would you consider then some of the, well, from your expertise and experience, that it has increased the value of a particular area, given the fact that the estate is now there?
Not necessarily. An industrial estate, generally doesn't. I can't say that it has had any positive impact on value, unless it's like one of the lower income areas. Then yes, it may have that impact, because a lot of people who may work in the factories would want to live near to the industrial estate, so they tend to buy the properties in that area. But if you are in the more upper income bracket, I think you want to live more away from the industrial estate. So again, it depends on the demographic you're looking at.
Right. Last question from me. I do apologize. Is there any possibility of a property having both commercial and residential value, in terms of part of it being commercial and part of it being residential?
Okay, when a valuation is done, we have to value based on what is the highest and best use. Is the highest and best use commercial only, or is it a mixed use residential commercial? Because there are some areas where you'll get the ground floor being very good for commercial use, but nobody will rent the upstairs, so you can basically say the upstairs is good for residential use. But there isn't a separation in value. You don't, and this is what a lot of people don't understand. Value is not, the value of a property cannot be split in terms of part of a building for this and part of the building, In fact, when we as evaluators give an apportionment of value in the report, it's really something we do to facilitate the banks, because they want to know their risk. So, but really and truly, if you're buying a property, a house and land, you're not buying the land separate from the house, you're buying it as a property. The value is over the entire property. We know what value might be attributable to the land only, so we can say, all right, you're paying $1 million, the land in this area is worth $400,000, so the building, the value that you can put towards the building is $600,000. But a property isn't sold by land is so much, land is, we're charging this amount for the land and we're charging that amount for the building. It's so this is the property, this is the price we want. So I hope that answers that question.
Right. There was one more question, but maybe I'll remember as we go along. I want to include now in our discussion Mr. Das, Mr. Curtis Das, who is an expert in the field of not only financial advice for insurance purposes, but he's also the branch manager at a well-known institution, Maritime Financial Group. with over 30 years experience. I do apologize, but this phone number would be edited and sent out back. It's actually not one that is presently working. And I was informed by Mr. Das. So the number is, if anyone wants it, it's 681-5973. And we're going to engage Mr. Das, and the purpose of him being here today is to understand a lot of times we go to the bank and we're doing a mortgage and they ask us for insurance. And we hear about insurance every day, why it's important. But why is it important, and how does it add value or add to the process of acquiring that asset? Mr. Das, I hand over to you.
Thanks, Shelley, and again, good afternoon to all, and all the panelists who are doing an excellent job, and I'm really here to just to support a bit. And Shelley mentioned something a while back, in that personal experience. You know, it's so important to share that personal experience. And today we have a lot of young professionals and people who are purchasing homes for the first time, right? And Samabe also indicated that purchasing a home might be certainly one of the largest single investments you might ever make in your life, you know. And hence the reason why this panel, the intention that Shelley has to ensure that we help you, we guide you, we give you enough information, proper information, so that you can make wise decisions. You know, if I had this type of experience when I built my first home, I would not have made a lot of costly errors, mistakes that I did at that time. And it's mere because of lack of information. Yeah. So the intention of this session, and in my case, the area of insurance, why is it important, or what's the purpose of it, and why do I have to pay an extra cost to get this mortgage, right? And really and truly, it is simply to protect a risk that you have no control over. Yeah. And insurance in this case, as relates to homeowners insurance, right, is one aspect. And then as a requirement for a mortgage, you will also require life insurance. God forbid if something were to happen to you. Because the lender do not want to go through the pain, or do not want to put out, for want of a better term, the rest of the family, because they have to sell your property, yeah, in order to pay off the mortgage. So what we do is to cover that risk that you have no control over. You have no control over fire and perils, natural disasters, yeah, and you have no control over living or dying, yeah. So if we were to show you a way where we can cover both risk at a reasonable cost, I think you will be more than likely a little more comfortable in knowing that your single largest investment is protected by insurance. Yeah. So that being said, it also extends, and sometimes a lot of people take it for granted. I mean, if you simply walk around your home and maybe start with room 1, room 2, living room, bedrooms, and list down the stuff that you have in the room presently, and then put a replacement cost, furniture, appliances, even your clothing, you're going to realize that you have a huge uninsured asset in your home that you would have spent thousands of dollars for. And for mere cents on the dollar, you can have it covered in the event of a fire, right? The other aspect I want to include at this time is the area of values. And I think Mr. Mabe said it correctly, in that the quantity surveyor's report is more aligned to the replacement value of your property. Well, of course, when we insure the property, and in this case, property is house and land, right? When we insure, we actually insure the building, yeah, the value of the building as relates to replacement. But the valuation will not give us a true picture of the replacement cost of the building. But the QS report will actually be in alignment with more realistic cost of today's market, today's cost, to replace that building or to reinstate that building how it was before. So that's important to know. And then the issue of keeping up to date with your value is critically important. You take a mortgage today and the value came in at, let's say, $2 million for house and land, but the actual house is valued $1 million. So we place insurance for $1 million in the event of fire or other perils. But here what? You left that insurance and you keep renewing it every day. You're paying your mortgage every year, every month. 10 years down the road, your property is still insured for $1 million. But to replace that property 10 years down the road, it's approximately $1.5 million with present material cost and everything. And God forbid something happens and you realize, but wait now, where am I going to get the next $500,000 to reinstate or rebuild this property? So it's important to keep up to date with present values, and that happens upon renewal. And we can advise you how to get it done, right? So I think it's more important for us to hear some questions from the participants. We can go on. I think Mr. Amlokan and Mr. Mahabe and myself, we can talk quite a bit in terms of the issues there. But really and truly, we want to address your concerns and we want to answer some of the questions that you may have to help you make a good decision.
Thank you, Mr. Das, for your information and availability to give that information. I do have one question for Mr. Ramlokan. We heard that a property can be evaluated with respect to commercial or residential. Would the rates differ in terms of a property being commercial and if it's residential?
All right, so if the property is semi-commercial, residential / commercial, we would give a blended rate, which would be a bit higher than the residential rate, but not as high as a commercial rate.
Okay, there was a question. Go ahead. Sorry, go ahead.
Yeah, it would be more or less in between the two rates. Average about 6.5 around there.
Okay. There was a question in chat. How long does it take to pre-qualify?
Within minutes, once we get say a pay slip or so, we could pre-qualify the clients.
All right, great. So I am just going to basically run through how you can get in contact with us. We have met Mr. Das, Mr. Mahabir, Mr. Ramlokan, and you can also get in contact with us via this number and WhatsApp as well. We are available. Once you leave a message, we will respond in 24 hours. We can connect you to the network that you see here, and they can also give you that information you so desire. Again, as Mr. Das said, I'll be running through these slides, just letting you know what our company would offer, but we'd like for you to participate with us now and ask us any relevant questions. I know that Mr. Reed was here. Mr. Reed, is he here still? I'm not seeing him. Well, he's actually a client, a past client of mine, and he is presently engaging in, well, possibly doing a mortgage for buildings. So I wanted to give him some good news in terms of what we're going to be engaging in the next round of webinar. This webinar will be continuing every month, if needed, twice a month. We will be having other personals as well. And in the next webinar, I'll just be giving you so you can formulate your questions as I speak. We'll be looking at the next step, which is if you're building, constructing, and therefore the finishing touches, which would be your interior decorating. So the experts in those areas will be present with me at the next webinar scheduled for March. Again, I want to thank you for coming on, for listening. And I would love to hear from you at this point. If you all have any questions, please put on your mic and ask those questions. We're here to answer them. Or if you want to put it on the chat, we'll answer them as well. So I will give you that as we open the floor.
Hi, good
Should we just
afternoon.
oh, sorry.
Good
This
afternoon.
is Franklin Maynard from Antigua, real estate agent. Thank you for the invitation that you had sent out, and great information. Pretty much what I've heard thus far applies to Antigua as well. So it's nice to know that we are all doing best practices throughout the Caribbean. So quite useful information, and I'm happy to be here.
Thank you for joining us, and we do appreciate your presence and any expertise that you want to lend to us, any experiences. We are gladly here to listen as well. Anybody else would like to ask any questions or make any comments with respect to the information lended to them this afternoon?
I would just have a question for Mr. Das. So
You appear to be frozen for a bit there.
Yeah, you froze, Ramlokan. You want to start over?
Sure.
Yeah.
Yeah. So if a customer has a property that they want to insure, but it's not being held as a mortgage, do they need to do a valuation to get that insurance amount, or how would you all provide the insurance value?
All right. So best practice would indicate that the valuation is a short document, is a short thing, right? Valuation quantity surveyors report, right? So without risking anything, I would say yes. However, in the absence of that, because we all know all these reports included insurance and otherwise, it's an additional cost to the client, right? So what we are saying is that we have a guide. We have a guide that we can assess the property value based on some of our underwriting requirements. Once completed, we should have a fair enough idea as to the value of the property based on our internal expertise. Yeah, and we can help the client. Yeah, so I hope that answers the question. Yeah.
Yeah, thanks.
All right. Anybody else has any questions that they want to ask? Any advice that they want to lend? Any comments that they want to make with respect to what they've heard so far? All right. So I would like to say thank you this afternoon for your presence in this webinar that you have made a success. I'd like to also thank our guests, Mr. Das, Mr. Mahabir, and Mr. Ramlukan, for lending their expertise and also being patient with us. I do appreciate you being here, as well as we look forward to working together in the future. Do have a great weekend, and thank you again for being here.
Thank you.
All
All the
right.
best.
Thank you.